Okay, folks, good morning. All right, guys, today is October 24th, 2022, and this is your Premarket Pulse. I'm Michael Patton, and let's get started. Okay, so a couple things. I'm going to first basically go over some of the movers from Friday and see what we got. So before I jump into that, let me just make sure you're clear about what you're seeing. So on the screen here, we have the True Edge trading platform. As you can see, we're pre-market right now. So looking down below, we have Mersana Therapeutics, MRSN. This was one of the better performers. We have a 11.27% gain. Now, this is not today. This is from the previous session, just to be clear. So this is looking at where it was as far as its gains. This is where it's at right now. So as far as the bid ask, we see that right there. But the close on Friday, we closed looks like at $8 a share. So quite a good deal up. All right, so I'll look into what they do. I know that they're a therapeutics company. I'll look at that later, but this was one of the movers. You can actually see the long-term or short-term trend here. I'm looking back to the 17th. So my view here is from the 17th of October to the 24th, just to give me a sense of generally what's happened with the stock. On the screen, I have the volume-weighted average price, VWAP, the purple line in the middle. And at the top and bottom extremes, I have the, I think I have it on first standard deviation. Let me double check. Yeah, it's on one standard deviation above and below. Okay, so what this is about, in case any of you are not familiar with the volume weighted average price, it is an industry benchmark of measuring what the fair price for a period of time was. It basically looks at price range as well as volume, and based on those two factors plugged into a formula gives you a sense of basically how things overall are going as far as the average price of the stock. So think of the purple line as the average price that this has experienced over time. So it's similar to a moving average, but it has a significantly different formula. But more importantly, is an actual industry benchmark. So that makes it very different than a regular moving average where anybody can choose what that is. But the VWAP is actually the industry standard that's used to judge how well a broker, for example, has executed trading orders for their client. So if the client says buy today and the broker averages above the, if their average buy-in price is above the pink line, then that basically means that they didn't do that good of a job, at least as long as it's within a certain distance, and that's set by the client. I'm not going to get into the details of that. Just the point is, this is an industry benchmark. So if we look at what's happening to the stock, it is clearly trading above the volume weighted average price. Give me 1 second, folks. Let me just average buy-in price. Just grab the. Okay, I just wanted to make sure my stream is working correctly here. Just watching it on another screen just to make sure the feed looks good to you guys. Of course, if you have any questions, by the way, just type them in the chat area to the right where you see my last message. Okay, continuing. So watching the charts, we can see that MRSN has been trending up recently. It had a big jump here on the 17th, or sorry, 18th. Then we basically were selling off for a while, but right about here, we switched over to a more upward trend. So after this point, as a trader, I should be coming back, considering buying this stock on a day where it looks like it may go up. And of course, the only way we know that is to watch it. So today, or as of, sorry, not today, but as of Friday, we had a good move up, so we could expect to see the same thing today, but we'll have to keep an eye on that. Um, so this stock is on the agenda, and let's look at its relative performance. Okay, on the screen here, I've got it plotted using comparison. I entered the QQQ, the NASDAQ ETF, as a comparison. Here's MRSN. As you can see, it is definitely a percentage higher gain over the last week. And if I drop it to a smaller time frame, okay, so I got it from the 17th to now, we can see 4.81% is what's been gained by MRSN over this period, whereas the NASDAQ, the QQQ, is only gained 2.58%. So it is outperforming the NASDAQ, not by a huge margin, but you can see that this is a stock that tends to either overperform at first, then it starts to underperform next, then it comes back. So this tends to have very smooth changes in its performance over time. I always look for stocks based upon how well they're performing based compared to the rest of the market. So, sorry, let me just adjust this here. There we go. So I like to look at stocks based on their relative performance. Relative performance means if I look at what the sector or index that the stock belongs to is doing, and then I compare it to what the stock itself is doing. Well, if the stock itself is outperforming, meaning that the stock is doing better than the rest of the market by a good margin, then I usually would like to look to buy that stock. Or conversely, if a stock is doing much worse than the rest of the market, then I like to sell that stock, short sell. So that means that if possible, MSRN would have been a short selling opportunity after this peak, as it was clearly lacking performance. In other words, the NASDAQ is fairly flat here. If I drew a line, you could see where my cursor's horizontal plane is. It's fairly flat for the yellow line, the NASDAQ, but you can see the green line is clearly trending down. So that would suggest that the stock is a short selling opportunity. Now, just because it's going down now doesn't mean it's going to keep going down, but the point is, if the market is not going down much or at all, but your stock is, that probably means things are really not going so well for that stock. So it's a better candidate for short selling and vice versa if it's time to buy. Right now, the performance of the stock it's moving in the same direction as the NASDAQ, but it is overperforming, but I wouldn't say by a huge margin. So I still would look at it, but just keep that in mind. All right, jumping back. Let's see what else we got. So MRSN, that will definitely be on our watch list, which it already is. This is my hot list. I'll update this probably later this week, judging by what comes up on the radar. But as of right now, that's what we see. And meanwhile, let me do one more thing. Just give me 1 second, guys. Just need to open another window on another screen. Okay, now I'm good. All right. All right, so moving on. Phase, F-A-Z-E. Let's take a look at that. Oh, by the way, before I forget, MRSN seems to have some decent pre-market activity. This is the market depth, the NASDAQ market depth here, total view as it's called. This is what the pre-market's looking like at the moment. We see our bids and our asks that are available. this is something I do keep an eye on. It is kind of early, so we're not seeing a lot of activity here, but that's more. This is a little more than for a lot of stocks, so probably this won't be active, but it is trading slightly below where it was. Looks like on the close of. Let me just make sure I'm right about that. The close was. Oh, actually, no, it's actually up. Sorry, correct myself. It did close up on Friday. So I guess the last trade was actually $8. Someone actually traded that high. So it closed, excuse me, it closed at $7.19. So it is up 81. It was up 81 cents as of the last trade, but the current bid ask is 726 at 759. So the last trade for whatever reason was $8, but currently we're trading below that, but that's still above where it closed on Friday. So probably there will be some buyers here. All right, so FAZE. Okay, now this stock is underperforming the rest of the market. Okay, you can see the NASDAQ here. Pretty flat, but FAZE has been declining and declining and declining. Okay, so this clearly is not a stock that's doing very well, but let's take a look at it. Okay, so here, if you look at the stock, it did have a pretty good bump on the 21st. Okay, after it first declined, so it looks like it gapped down first. I'm just looking at the date. Gapped down first and then bounced back up sharply at the end of the day, towards the middle to end of the day. I'm on Central Time, by the way, so that's what time. So 11 o'clock my time is 12 o'clock Eastern. But pretty nice bump up. Now it's been drifting off, and let's see where we're at pre-market. Currently, no quotes, so it doesn't look like this one is active pre-market, but we'll see what happens. But the last bid ask was $363 at $4. So not active at the moment, but give it maybe another 20 minutes. We'll see what's going on. But mostly the stock has been going down. I'm not sure if this is easy to borrow. I'll have to check. But my guess is that this will probably be a hard to borrow stock. So most likely you wouldn't have any short selling opportunities there. But there's always the possibility that it might be. So we'll see. I don't see any. I'm looking on another screen. It does look like it is hard to borrow. I just did a search for stocks that are hard to borrow in the NASDAQ, and looks like it is. So this one, even though it has a nicely downtrending move, and of course we want to go with the trend, especially when we get pullbacks. That's where I look to short sell. But right now this does not look like a short selling opportunity. But if it does start to rally, then we'll definitely take a look. This stock does tend to have pretty nice rallies when it bounces off of lows. So if we can catch it at the right moment, you might be able to catch a move like this or like that. Okay, so today it doesn't look like we're trading towards the lower extremes yet, so probably this one won't be a great opportunity today. All right, let's see, apps. So this is resorting it again. Let's go to ASML. Okay, now we got some quotes here. Looks pretty active. You can see the quotes are shifting a lot. That's the sign that people are actively trying to get into the stock. So 473.50-ish to 473.84. That's our current bid ask. Doesn't look like there are any big players. The order sizes are 100 to 200 shares, so not really any massive activity there. No major support or resistance, at least not from the order book. So if we see like a very large order, like 5,000 shares or 10,000 shares show up, then we would consider that an indication, Usually the market trades towards larger liquidity. A lot of people would think that it would go away from it. In other words, a lot of people think that if you see a 30,000 share order suddenly appear in the bid, that the market would trade up away from it, but usually it trades to it. It'll go to that order, basically hit it, fill, and then either take it out, meaning that all the people who need to sell some significant size, they sell at that big bid, and maybe there's not enough of them to get rid of it to wipe it out. So if that's the case, then the stock usually goes up. So those areas can be really good support, but remember the market tends to go towards them first. So if you see a big bid appear several bids below where the market is down, expect the market to trade in that direction. Now, of course, you could use that as a means to do a trade. You could short sell, expecting the market to go down to that price, but it would have to be a pretty good range, in my opinion, for that to be useful to do. Most of the time, it's not going to be that far down, so therefore, it's better just to wait and see if the market can support itself there, and if it starts to rally away, then that might be a good move up, especially if that large orders persist below the market. They just support the market up as it moves up. All right, so ASML Holdings, let's take a look. That's clearly an overperformer. Okay, so it's definitely performing better than the rest of the market. Mostly it was in sync with the market until the 19th. So if you can see here on the left, the two lines, the NASDAQ QQQ ETF and ASML, were trading very similarly to each other, and then they break apart very sharply. So once they break apart very sharply in green, then we see a nice move up from compared to the rest of the market. So this stock is up 17.5% compared to only 2.58% for the NASDAQ. So this is definitely a performer. And if we look at the regular chart of it, you can clearly see a gap up, sells off, a gap up, moves up, then sells off, then gaps up again, sells off after a while, moves up again. So clearly this is moving in waves. All right, so looks like most of the action is occurring between the close of a previous day and the open of the next day. So this tends to move on the open, although this last period from the on the 21st, this has been very persistently moving up. So this hasn't pulled back much. So perhaps the momentum is going to still be here at the open. We'll see. All right. So the stock looks fairly good, but with this one, I would be a little careful if it gaps open to wait a second to see if it really keeps going, because you might get a gap open and it immediately sells off. So I'm looking at 30-minute bars here. So, if you're not seeing any forward progress after a while, then assume the stock's going to come down. Now, this stock, let's see what the price, this is definitely going to be a shortable stock. Any stocks that are this expensive, you should be able to easily find shares to short sell. So you can go either way on this. It just depends on the open, how strong of an open we get. If it's a very strong open, then this is easy to borrow stock, as I thought. So if there's a very strong open in either direction, especially if it gaps up and really starts to sell off right away, then if that happens, then I would definitely look to short sell. Because even though it's in an uptrend, it doesn't mean it's always going up. In other words, here you have a nice rollover transition into a downtrend. This one was a lot more difficult to read in this case. That one was easy. It gapped up and immediately starts to fade. So if you get a gap and fade or a gap up and then momentum is lost and it starts to turn around, those are my favorites. If it's very difficult to read, like this one, where it's back and forth, and then when it starts to sell off, it's not really clear at this point where my cursor is whether that trend is going to continue down. I mean, someone could say, well, it went below the low of the previous bar, but trust me, that's not always a good way of gauging. Even though something goes below the previous bar, it doesn't actually mean that a reversal is certain. or very likely. A lot of times you'll just see the stock trade neutral for a while and then maybe break down or continue to go up. So in my opinion, you only want to do something when it looks crystal clear. Like if you gap up and you just can't advance at all like it did here, where the move is down for that first half hour, then start the next half hour, you're trying to get in on spikes up. You're not trying to get in to sell the low. Never want to do that. You want to wait for things to kind of push back a little bit into the previous bar's range. And then when they start to flush, look like they're getting weaker, which will be easier to see on a 1 minute chart, by the way. 30-minute charts show me this is the big picture, but on a 1 minute chart, you'll clearly see it happening where you have that first period and the market starts to pull up just a little bit, then turns around. At that point, you want to sell. So that's where you want to take your entry on pullbacks. Same thing on rallies. Now, rallies might be a little harder at the open. You may have to just buy into the momentum right away, but once something has moved up in one direction and starts to go the other, usually you'll get a nice transition if it's going to really trend. Something's down and starts to turn around and go up, like the last stock we saw, phase, like this. You're going down, so this gap down, it's going down, then suddenly you have a sharp transitional move up. If you get that, that's a better trade to go long, in my opinion, than a lot of other trades. So, all right, so again, this looks like a good opportunity. Let's see what else we got. All right away, this one looks questionable. I'll tell you why. But look at the chart. It doesn't look very clean. It's not terrible, but you have a lot of spots where you don't have a high or low. Everything's the same price from open to close. If you see that on a chart, these flat spots, these hash marks, I don't know what to call them, but when you see that, it means the opening and the closing price were exactly the same, right? So for that to happen, only one thing could happen. That means that basically the one trade took place in the entire period, or a few trades, and they're all at the same price. That's not a good sign. So this is not a very liquid stock. Also, it's trading at a very low price. So it did move, I guess, but I mean, you don't want to be in something like this. Plus, if you look at the range from the top, that's 142 down to where we are now, that's 130. So it's only 12 cents. Some people chase after stocks like this. There's a mentality that I've seen for some amateur traders where they see a stock that trades in a very tight range and they think of it like this. They say, well, if I do a lot of shares, it's a cheap stock. So if I do a huge number of shares and I try to trade this really tiny range, it only goes 3 cents, I can make a lot of money, because if it doesn't go my way, it only goes a couple cents the wrong direction, no big deal. But that kind of reveals a critical error in thinking. If you have to put a lot of shares on to make money off of a very small move up or down, what if it goes the opposite of what you want by a few cents? Now you're going to have a significant loss, and probably it's not going to be that easy to do. So unless the stock can really move, I would say leave it alone. And this one, I know in the past, I have seen this stock move a lot, but in the present, it doesn't look like it is. All right. Let's see what else we have. PCAR. Okay, that looks good. But this stock seems to be very well in sync with the overall market. It's not perfectly in sync, but the market actually is outperforming 2.58% versus 0.85%. So this stock is definitely moving with the market, but it's lagging behind. It's like it's on a slight delay in its movement. So if I were you, I would not consider this stock. It doesn't look like much is going on with it. Now, there are ways to trade this. There's some very effective ways to trade this, in fact, but I would leave that for more advanced discussions. Definitely in our advanced lessons, I go over relative performance, and I do mention some ways that you can actually use that to trade. If you have two stocks that are, stock and it's an ETF, they're very similar, but one sometimes they get apart from each other. There are ways to trade that where you basically have to trade both stocks at the same time. But again, that's something that is covered in the advanced lessons. So definitely check that out. Okay. But I won't be going over that. This is not the sort of thing I would chase after if you're looking for something that's really moving. But if you got nothing better to do, then you might be able to trade something like this. But let's look at the overall picture. So this is trading pretty much like the NASDAQ. It's doing pretty much the same things, but that's going to make it harder to trade. The more a stock trades like an index, the harder it is to trade. Indexes are not the easiest things to trade, so you want to keep that in mind. Sorry, give me 1 second, folks. I'll be right back. Okay, I'm back. Okay, sorry, I just need a little water. All right, guys. So let's see what else we've got. We already looked at PCAR. Let's look at page 2. Let me just see. Let me resort this again just to see if anything is. Okay, yeah, I thought so. So what I did is I just resorted the percent change just to see what else is going on. Those are all green. Okay. All right, EXPI. All right, looking at EXPI. This one generally is moving with the markets, but it does diverge sharply in either direction, up or down. So this one is more likely to be an opportunity. I like stocks, again, that move more or less than the rest of the market. They move more upwards, more downwards than the rest of the market. This one definitely does. You can see these big swings up, big swings down. So this one looks like a good candidate. Let's take a look here at the chart. So here we have a nice short selling opportunity. You have your gap up, pretty sharp move up, and then after that begins to fade. And then, of course, where does it fade to? Back to the volume weighted average price, which is the norm. And of course, here we have a gap down. Market chops around at first, really difficult to find any direction. Then finally settles into a nice move down through the 19th. And then on the 20th, we have a sudden reversal. Nice move up. Then starts to fade. So again, looking pretty good there. Sorry, give me 1 second. Okay, so here we have a nice fade, and presently the stock is just bouncing around, not doing much of anything. Okay, so this could be an opportunity as well. Doesn't look like so far. Not seeing. Okay, there's one quote. Okay, here we go. A few quotes here. But the bid-ask spread is really wide, so this is not very active. 10.99 versus 13.63. That's a huge spread, which means that not too many people are active pre-market. Also, these quotes aren't changing very much. So, as you can see, ASML has some good pre-market volume. Let me just go back to this again. One of the clearest signs that a stock is active is you keep seeing changes in the quotes. You keep seeing people changing their bids, changing the offers. That means people are chasing getting filled. Also has 46,381 plus shares that have traded so far this morning, where I'm highlighting there. So that stock is definitely active. So that's more likely to be an opportunity. All right, so EXPI, I would just say we'll wait till the open to see if anything's going on. Okay, here's another one I didn't look at, BLMN. All right, market spreading apart the stock is spreading apart from the market. This one might be a little harder to exploit because although it does diverge quite a bit, it took a long time for this to get back into sync with the market. I like something that moves up and then moves down, then moves up. This is kind of random looking. It doesn't appear. It does appear that it's got a more bullish inclination, but I'm looking at where the spikes and valleys are. So the spikes on the yellow, the NASDAQ, and this are the same place. The drops here, they're the same place. Top, spikes up here, spikes up there, spikes down here, spikes down there. Rallies here, rallies there. So it is moving with the market, just a little bit out of sync with the timing. So it may take a little longer to move, or it may take less time to move. So this is basically mimicking the NASDAQ, but sometimes it's well ahead of it. But at the end, these two are about the same gain or loss. The NASDAQ 2.58%, and BLMN Lumen Brands is at 2.42%. So not much going on there. One second, guys. All right. So this one I would not trade unless something unusual happens. Again, the more stock trades like the rest of the market, the more likely you should just skip it. Okay. Just don't get into the habit of chasing after stocks that are just doing what the rest of the market is doing. Okay. Again, there's ways to trade this. This would be another example of a relative performance-based trade where you would trade this versus the QQQ. But again, that's a more advanced strategy. You'll see me discuss that in the advanced lessons. So anyway, moving on. Let's see. Let's look at some stocks that have been going down. Okay, I've been looking only at stocks going up, so I'm just going to resort my list to look for the down movers. Let me do that one more time. There they are. Okay. FUTU, Billy, Dada. Okay, these are all the losers so far. Let's take a look. Okay, now this one, again, if we look at it from where my cursor is here on this chart to over here, you can see pretty much it's doing what the NASDAQ is doing. It did have a big drop first. That's what put the performance so negative, but other than that, spike up here, spike up there, slide down here, rally there, fall down, fall down. They're pretty much doing the same thing. So wouldn't really look at this one right now. Maybe it later on it'll start to diverge in performance, but for now it seems to be doing exactly what the Nasdaq is doing. And remember, guys, if your stock is doing basically the same thing as an index, then for the most part you might as well just trade the index or some ETF, that's similar to it. Like there's more than one Nasdaq based ETF. You could always trade those if you really wanted to, but in my opinion, there's not really much of an advantage in doing so. And you can't really do that with individual stocks. If they're following the market, they follow it for as long as there's no reason for them not to. So as long as the stock is following the market, I just leave it alone. But once it starts to diverge, then I take a look. So in short, this one I would mostly skip. Now I will make one exception to what I just said. If a stock has an overwhelmingly negative bias, let's say like whenever the market goes down, the stock goes down a lot more, and then whenever the market goes neutral, the stock basically goes neutral. If the market goes up, the stock does not. So in other words, it has all of its movement biased in the negative direction. Doesn't happen that often. If you have that, I would short sell stocks like that for sure. Again, the key difference is when the market goes up, the stock doesn't go up. In other words, the market's rallying, the stock kind of makes a little move up, and then that's it. So those sort of stocks, they have such bad news that every time they get bought up, everyone sells it right away. I might get an example of this, but I don't see one right now. But if I do, I'll let you guys know. I'll highlight it. So here's Billy. I think Billy actually is an example of that. Let me check if I'm right. Let me go back 1 week. No. Oh, I guess that was the same. Let's go 1 month. Yeah, well, no, Billy does rise pretty sharply here, so no. But mostly this stock has been bearish recently, so it does tend to sell off after a while pretty sharply. So this one, I believe, has a pretty strong negative bias. Even if the market's flat, the stock is still declining. So we do know it has a negative bias, but recently this one could be an opportunity. It does have some pretty nice big swings up and down. So this looks like it might be more tradable. It's not quite as flat in its performance as the Nasdaq. So this one I would say probably is an opportunity in some situations. Recently, since the 21st, it does not look like it's doing anything much different than the rest of the market. Market was up, so is this by a slightly greater margin. But I would consider this a possible trading opportunity. I just don't think right now it's showing any signs that it's going to do anything special. Looking at the pre-market on it, it does have a lot of shares that have already traded, 857,000, so it is active, that's for sure. There's a big bid right there. So remember, guys, I was saying about these large bids, there's 5,100 shares right where my cursor is going left to right on the time and sales. Right, I'm sorry, the total view. This is the time and sales, sorry. But you can see some big orders. Look at these sizes: 2,000, 2,000, 2,000, 2,000, 2,000, 2,000, 1,000, 1,000, 4,500. There's some big trades going on here, guys. So this one is active. Not sure if it's going to do anything special this morning, but there's definitely a lot of people looking to get in or get out of this, depending on which way they're going. When the numbers are in white, you can't tell if they were buys or sells. They happen in between the bid and the ask. The exchanges do not communicate whether that's a buy or a sell. If it's green, it means it was a buy at the ask. Red, it means it was a sell at the bid. So those are easier to spot. But these filled in between, look at that. There it is, 4,950. So I guess someone just took out in two trades, 1,050 and 4,950. They took out that 5,100 share order that was on the bid. So someone just basically sold enough to move that out of the way. And now it looks like things are back to normal, all normal size trades for now. So there's at least two big players in this. We know for sure by deductive reasoning. We know there's at least two large players in this morning. So we'll have to see what happens. Looking at this on the chart, not a lot of movement. Like I said, this is moving generally with the Nasdaq, except at times it does more extreme moves. I would keep an eye on this at the open, just in case those bigger players are going to be more active after the bell. But as of right now, it's hard to say if anything special is going on with that stock. Okay. And then let's look at data. Don't see much here in data. Again, this looks like it's mostly following the rest of the market, but more bearish. So this one's down 10.21% versus a gain of 2.58% for a NASDAQ. So the bias here is overwhelmingly bearish for this stock, but does tend to have very violent swings up and down, which is always good. We like movers. Right now, doesn't look like much is going on with the stock, just it's mostly bearish. So we can clearly see the best places to short sell this is at the first standard deviation up from the VWAP. I mean, this one seems to be fairly consistent in how it trades up there. We do have to wait for it, but my experience is that when you have wider spreads, between the lines, and you get sharp moves up or down, that's usually where you get better responses from the market, from the stock. So a nice wide range, you jump up and you get to the extreme, and that's where you're probably going to reverse. But right now, it doesn't look like much is going on. The pre-market is not that active. It doesn't look like much is happening. 20,000 shares, but traded. I can see that right here. But the bid-ask activity is fairly neutral, but we do have two big orders sitting on the ask, 1,000 shares, and now they just canceled the 5,400 share. It's probably still out there, but probably just not visible. You can do what's called an iceberg order, where you can hide the true size of your trade. But we do know that in this area between 336 and 340, there's a big seller looking to sell a lot of shares. I'm looking for orders that really stand out versus the background. So this one does stand out from its peers by far. It's larger than every other visible orders, all the visible orders combined. Now it's actually disappeared, so I guess they moved it. Or maybe not. Maybe someone actually traded it. Let's see. I don't see the time and sales, so I guess no one did. So it's back there. If someone had traded it, we would have seen it in the time and sales, but we haven't. So this one might be getting active, but for now, not sure what's going to happen there. NTES, well, I'm not sure what that's this is sometimes this happens on charts. It's not the NASDAQ sometimes publishes, I guess, data that's not so great or not so accurate. So that's going to make the chart very distorted for this stock. So I doubt anyone actually traded this high, but that's what it says on the data feed from the NASDAQ. So sometimes this happens. You've probably seen this before on charts. So whenever that happens, I just ignore it and try to get a sense for what was happening outside of that bad tick or bad print, whatever you want to call it. Stock is moving. Let's take a look. I'm just zooming in and out. Okay, let's see. Looks like this is definitely a negative. This is very negative. This tends to really slide anytime the market is not. If the market goes down even a little, this one really goes down a lot. And now the market here is going up from where my cursor is here to there, but this stock is fairly flat. So this is a good example of a stock with a very negative bias. So I would expect this stock to actually sell under most circumstances. So if the market's even slightly down, NTES NetEase will probably sell off. So I would definitely keep an eye for short selling opportunities for this. But either way, expect it to move. I would definitely consider this a good possibility. Look at the quotes, lots of size visible, 3,700 shares there, 2,000, 1,100, 5,600. Some players are here at pre-market, so this one probably will move. We'll see. Also, once the market starts trading during the regular session, the easiest way to deal with this issue is just go here, change the time setting to like 5 minutes or something like that, and then when you zoom in, you'll see something more normal, right? So nothing much to look at there, but just as a heads up, if you ever have a bad print that's skewing the view, you can always zoom in to get rid of it. All right, Momo. Just waiting to see if there are any quotes. I mean, there have to be 119,768 shares traded. So the quotes are just appearing as they get updated. So these are the current quotes we've got. 411 at 413. Doesn't look like this is extremely active right now in the pre-market, but does show some pretty strong negative skew. Definitely underperforming the market by a wide margin. And that means that this is another possible short selling opportunity. It is a very low price stock, so probably hard to borrow. Let me just check. Oops. All right, checking here on another screen. Oh, actually, this is easy to borrow. Huh. So this one can be easily short sold. That's unusual for this price range. Usually stocks that are under $5 are hard to short sell. This one's not. So you can see where you want to short sell in case it wasn't clear. Look for these spikes and then try to sell off when the market rolls over. There are other places you can short sell too, but if you notice that there's a pretty big pattern in a particular stock, then of course go with it. This also seems to have some good rallies from the lows. So off of the extremes, you might get some good moves. If this one gaps today, higher or lower, let's see, 411, 413 versus a close of 451. So it's going to gap lower when it opens. At least at this point it will. So, but not by a lot. So I'm not sure if this will be a great trade at the open, but keep an eye on it. Momo is the symbol. Is this Ericsson? Yeah, Sony Ericsson. This one I would skip. It had a really big drop here, but it looks like that was due to, I'm guessing, earnings on that one. Let me just double check. That's my guess. That was an earnings-based drop. Yes, it was. So earnings came out for this stock, and yeah, that was why it dropped. So that was on the 20th. So the sell-off here was due to earnings, and since then it's just basically followed the rest of the market up or down. So this one I would just say nothing much going on here, but we do have a lot of volume, very big volume, 20,000, almost 21,000 shares there, 10,700. So there's some big size visible on this, but my guess is that this stock will be fairly contained in a pretty tight range. The reason why I say so is I know Ericsson, I've seen this stock quite a few times. It's not usually a really big mover. And normally, as you can see, normally it's just in sync with the NASDAQ very tightly in sync. These two lines are basically moving the same direction, same time, not really diverging much. So this is not a stock that you're going to get a lot of action from usually. So, if it does something special at the open, great. But all I'm saying is don't expect it to. Let's look at CFLT. Okay, this one mostly moves in sync with the market. It's very jagged. It does tend to have big departures, and then it comes back. So that is a good thing where you have something that is in sync with the market, but it can make these really big departures away, and then it comes back into sync. In other words, it gets really far away to the downside. It really goes much farther down than the market goes down. Then market goes up a little bit. You get this huge rebound. So these you can trade, but remember this is mostly overall market-driven movement. It's not moving on its for its own reasons. It's just basically an exaggerated movement of the QQQ. So in that sense, those can be very useful. You just have to catch them at the right time. Normally, you're just going to have a lot of more choppy action. Gap up here, nice fade, big jump here the same day. Of course, the NASDAQ was going up sharply. So this could be an opportunity as well if the market has a strong start, but otherwise I wouldn't think too much about it. Speaking of the market, let's look at what it's doing. QQQ. So just so that you know, in case you're wondering why is it showing both stocks, even though I switched to the QQQ, it just swapped them. So now the yellow line is now QQQ and CFLT is now the green line. Actually, I think that's what they were before. I just inverted them. Yeah, that's right. So I have to change this. I don't want CFLT to be the comparison. Um, Let me do this really quick. So when I entered the same symbol, it actually automatically flipped it for me to where it put the previous symbol as the comparison, which is not what I actually want. All right, so going back to CFLT, this one looks like it's mostly in sync with the markets, has some nice moves, but not expecting too much. All right, so going to the market, as I mentioned, we got about 7 minutes before the bell. Let me just see what's going on overall. So now this is the Madison Trading House platform I use, but it's not required that you use this. But I'm just looking at the overall market just to get a sense for what's been happening. So financial services is the only real underperformer recently. Most other sectors are doing fairly well. So that's what we should expect. Financial services, therefore, might be a good place to look for some rallies for stocks in that sector that are not performing too well or weren't performing too well. They may rebound sharply today. So definitely you should look out for that. Let me see what else. Let me check this stock out. Boston Beer Company. SAM. Let me just see what's going on there. That's a NASDAQ stock. Oh, no, that's a New York Stock Exchange. That's weird. That shouldn't be on my dashboard. That's not what I asked for. Oh, because I had. That's why. Sorry. Accidentally had. Yeah, SAM is not one of the stocks I was looking for. Let me check here. I just want to see what financial services stocks were doing. is again. Sorry, NASDAQ. Let me go back here. Yeah, so I guess financial services were doing bad across the board for everybody, but only one PayPal. Okay, let me check out PayPal, see what's going on there. Well, it doesn't look that bad. I mean, it is underperforming, but not by that wide of a margin. Yeah, this one, I don't think there's much there. But that's pretty much a good summary of where the market is overall. Um, PayPal. PayPal's had some pretty interesting news recently, but I don't know if this is a great opportunity or not. But all I've done here, guys, is look at my watch list, which I do update periodically. This is my NASDAQ hot list. I prefer this to create my own custom watch list than to use percent gainers or percent fallers. Those are more typical scans that you'll see, but when we add our own custom lists based on my analysis of the markets as a whole, this will be very helpful. Of course, you guys will have access to this, or do have access to this through the software. So that will make it a lot easier for you to find good opportunities, just like I do. So we're just going to keep an eye on our hot lists for stocks that are moving. And like I said, I will periodically add some more symbols. But before the bell rings, if you guys have any stocks that I didn't mention that you want to go over, let me know. I'm just going to take a quick last second run through some of the other symbols that I see here. Okay, this one looks fairly bearish as well. Okay, MRVI looks like a good one to keep an eye on. Ooh, GoGo, really strong performer here, GoGo. Keep an eye on that. That is consistently moving up. The market is moving as well, but this is definitely greatly outperforming. What did they do? Telecommunications, it's a small company. Okay. Okay, so this is just the telecommunications company. And oh yes, I remember these guys. They're the airline Wi-Fi. Okay. All right. All right, just some general news about financial conferences, stuff like that. I don't really see a whole lot there. Definitely look at this stock at the open. GoGo looks like an attractive stock. It's actually trading slightly below its projected lower price by analysts, so that's a good sign. So I would definitely keep an eye on this stock. Probably is going to have some momentum going forwards. So that one, GoGo, looks fairly good. Premarket seems to be active too. So this guy, wow, that looks really good. That looks really, really good. Um, I like to look for stocks that have persistent reasons for going up or down. This one definitely has, as I showed you, the fundamental picture here. These are analyst targets. You can see that they're up. So the middle target is $20.80. So, I mean, this is definitely something more of an investor's kind of a way of looking at things, but stocks do move on fundamentals. So if you got a stock that has a pretty clear bias in the bullish direction, then look for times where it's rallying. Of course, you can always short sell too. Let me see if this stock is even shortable. I wouldn't commit to a short sale just anywhere. If I'm going to short sell it, I would wait until this is an easy to borrow stock too. So if I'm going to short sell that, I will wait for it to look like it's hit a peak, starts to sell off. But as you can see with this one, all the major actions in the positive direction. So intradays can be pretty good. Okay, bell just rang. Let's take a look at what's moving at the bell. And let me switch this to an intraday view. Let me turn this off. Okay, let me make this 1 day. Sorry, I think I'm gonna have to switch. One second, guys. I think my platform may have frozen. Let me refresh this. Hmm. One second, folks. All right, folks. So I want to wrap up for now. Just was doing a quick browse around the markets, but markets are now open, so we'll see where things go, and then we'll go from there. All right, so I'll see you guys tomorrow morning, same time. Take care.